This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 26, 2026, and this is the After Hours session. Now, let's get into it. Extreme fear at 14 out of 100. The market is pricing in a worst-case scenario, yet the VIX is languishing in the low 18s, suggesting a disconnect between the crowd's panic and the actual cost of hedging. As we head into the EFF OMC meeting on July 29th, the question isn't whether the market will bounce. It's whether this fear is a capitulation event or a prelude to a deeper structural breakdown. The data shows a market at war with itself, loose liquidity versus crushing sentiment. Let's look at the week ahead. Good morning, I'm ShadowQuant. Here is the setup for the week of July 26, 2026. We are waking up to a fear and greed index of 14/100, the lowest reading we've seen in months. Bitcoin is trading at $65,343, down 0.8% in the last session, while Ethereum sits at $1,948.56. The broader crypto market cap is roughly $2.32 trillion, with Bitcoin dominance holding at 56.5%. Thanks, Shadow. Let's talk about the mood on the street, because 14/100 is not just a number, it's a scream. The fear and greed index is at 14, which is extreme fear territory. Historically, when we hit this level, the market doesn't just pause. It often whipsaws violently as late sellers get flushed out. However, the 7-day trend is rising from 12 to 14, which tells me the panic is still fresh. Retail is not yet ready to buy. They are still trying to catch the falling knife.
Let's look at the charts, because sentiment doesn't move price, volume, and structure do. Bitcoin is currently at $65,343. The key technical reality is that we are in a clear downtrend structure. The 56.5% Bitcoin dominance suggests that capital is rotating out of alts into Bitcoin as a safe crypto haven, or simply that Bitcoin is bleeding slower than the rest.
I'm looking at the flows, and the story here is capital preservation and stablecoin accumulation. Let's look at the on-chain data. Bitcoin funding rates are currently at 0.0046% per 8 hours, which is elevated compared to the 7-day average of 0.0021%. This is a 71th percentile reading. This is a crucial divergence. While sentiment is in extreme fear, 14/100, the futures market is showing that leveraged longs are still paying to hold positions. This suggests that sophisticated traders are not fully capitulating. They are using the dips to accumulate long exposure, betting on a mean reversion.
I'm here to stress test the bounce narrative, because the biggest risk this week is that extreme fear is actually a trap before a deeper move. Everyone is talking about the EFF OMC meeting on July 29th as a catalyst, but let's look at the risk we're ignoring: the credit spread divergence.
Let's synthesize. We have a macro regime that is risk-on due to loose financial conditions, NFCI at 0.552, but we have a market sentiment that is extreme fear, 14/100. This is a classic divergence. The smart money flows CIPHER are accumulating stable coins and building Ethereum positions, while retail money Pulse is fleeing in fear. The technicals grid show a broken downtrend structure, and the risk SPECTER highlights credit market stress that could trigger a liquidity event.
Let's hear the weekly calls from the team. Remember, these are forward-looking views based on current data.
The sentiment is so crowded on the short side that the risk of a squeeze is high. I'm looking at the fear and greed at 14. When fear is this extreme, the path of least resistance is up, simply because there are no sellers left. The VIX is low, which means no panic in equities to drag crypto down. I see a relief rally as short-term traders cover. My call: Bitcoin bullish, target $68,500 by Friday.
The chart is in a downtrend, lower highs, lower lows. The $65,000 level is being tested. The volume is not confirming any bullish reversal. The false thrust signal and the declining advance-decline ratio confirm weakness. We are not breaking $68,000. We are likely to lose $65,000. My call: Bitcoin bearish, target $62,800 by Friday.
The funding rates are elevated for longs, but stablecoin supply is expanding. The flows show accumulation, not distribution. The rotation into Ethereum and the tokenization news provide a floor. The downside is limited by the dry powder on the sidelines. I see a consolidation. We won't crash, but we won't moon. We will grind. My call, Bitcoin neutral, target $65,200 by Friday, range bound.
The credit spreads are widening. HY yields are rising. The loose liquidity is a trap. If the ETHFOMC speaks hawkishly, the credit markets will crack and crypto will follow. The $65,000 support is a bull trap. The breadth is weak. The risk is a break below $65,000 that accelerates quickly. My call, Bitcoin bearish, target $61,500 by Friday.
We have a divergence. Sentiment is extreme but flows are accumulating. The risk is credit stress but the technical setup is a range. I believe the market will test the low end of the range and find support. The extreme fear is a contrarian buy signal for the swing, but for the week the trend is down. I see a grind lower than a pop. The net effect is a slight dip. My call, Bitcoin bearish, target $64,000 by Friday.
So we have a split decision. Pulse sees a squeeze, Grid sees a breakdown, CIPHER sees a grind, SPECTER sees a credit-fueled crash, and Apex sees a bearish grind. The common thread? $65,000 is the line in the sand. If we lose it, the next stop is $60,000. If we hold it, we bounce to $68,000. The ETHFOMC on July 29th will decide which path we take. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.